Hey, what's up, everyone? Welcome back to my world of stocks. So, we've got a stock market weekly update for you today. I'm still debating on whether I should turn this into a regular weekly series. So, please let me know if you'd want one of these every week, or maybe just hit that like button. That lets me know that you want more of these videos. But hey, this week we have a lot going down that we need to talk about, notably oil stocks falling from the ceasefire between Israel and Iran. We had HIMS stock crash after losing a key weight loss partnership. Tesla kicked off its new RoboTaxi service. NVIDIA climbed back up to a record high again, and there's more to cover too. So I'll break all of this down for you today. We'll start first, though, with how the markets are performing so far this week. Then we'll cover any macro news, and then we'll jump into all of those juicy individual stock headlines. Okay, so taking a look at the markets first, I am recording this right before the Friday open, so it might change a little by the time you watch this, but so far it's been a very strong week, with the S&P 500 climbing about 2.5%, while the tech-heavy NASDAQ saw even larger gains of about 3.5%, which does tend to happen whenever the market is up or down. It's going to be a little more aggressive on the tech side of things because those tend to be more volatile, maybe more growth-oriented type of stocks, a little bit richer valuations, more hype and optimism kind of baked into them. So you'll just see bigger swings on those. Now, like I said, though, it was a very strong week overall in the market. And the reason why brings us over to part two of this update for the macro news, where we continue to see an increase in investor confidence kind of starting to bubble up again, especially coming off of the April tariff lows that, really shocked the whole world. Over time, though, we've been seeing an easing of global tensions with more optimism flooding into the market that, more trade deals are going to be continue to get done, and thus it'll benefit overall trade and the global economy. At the moment, though, tariffs are still widely in effect in many areas. And because of that, the Fed Chair Jerome Powell actually said on Tuesday, gave remarks to the Congress, where he said that they likely won't be cutting rates soon, as those tariffs that are still in effect may still add inflationary pressure to consumers, and therefore high interest rates may need to stay on longer to help cool down that inflation, saying, quote, "Policy changes continue to evolve and their effects on the economy remain uncertain. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance." And then he also added, "The effects on inflation could be short-lived, reflecting a one-time shift in the price level, but it is also possible that the inflationary effects could instead be more persistent." And he added too that they, quote, "expect a fairly substantial wave of price increases to come through to the consumer." Still, I think most investors are really looking a bit beyond that to the later end of this year, where they do still expect inflation to kind of cool off a bit on new trade deals, of course, and then we should have interest rates starting to get cut, which even members of the Fed have noted that all of the tariff-driven inflation will likely be temporary or more of like a one-time increase. And that's why I think you saw the markets actually rise this week despite that tone from Jerome Powell about, rates staying higher a little bit longer. I think we saw more optimism flooding into the market, especially among tech, because they're really expecting rates to eventually come down in the later half of the year, which would greatly help all of those growth-oriented tech stocks that really rely so much on cheaper borrowing costs. And the market does tend to be forward-looking, so I think it's just expecting rates to come down later on, and that's why you're seeing stocks rising a bit now. Really, though, what I'd say that most eyes have been on this past week, and what is probably affecting the market a bit more than maybe just say interest rates, is the whole Israel and Iran conflict, with the fear being, whether that could escalate with America's involvement now into something much larger and more serious. And of course, you're seeing, the more kind of fear-pushing articles out there warning people about, like a looming World War III on the horizon, the potentiality of it. But thankfully, we actually got a escalation this week, as both Israel and Iran agreed to a ceasefire, which started off on a rocky foot, obviously, but thankfully it does seem to have calmed down, at least for now, into a full-on ceasefire, and the hope is that that will continue to stay that way. All we can do is hope and pray for that. But at the moment, it's kind of helped stabilize the market a bit. And so that's allowed for the uptick to actually happen throughout the week with stocks. With that more kind of macro news out of the way, though, it's time to shift over to some individual stock updates, where this week we had a few different things happening. HIMS stock actually crashed by over 30% in a single day. It's a very popular stock. And this happened after its weight loss drug partner, Novo Nordisk, abruptly ended their collaboration with them. Novo, of course, is the maker of the very popular Wegovy GLP-1 weight loss injection, which they've been supplying to HIMS, an online health company that then offers these treatments to its patients through their online telehealth platform. And that has been in what has been a little bit of a disruptor in terms of their business to the traditional kind of hospital or in-person health market. So they've been doing a great job business-wise, and the stock has performed very well. But Novo now just decided to cut ties with them, reportedly over concerns that HIMS was using cheaper compounders to sell the drug, including unauthorized suppliers from China, even violating FDA guidance and possibly misleading consumers on safety and sourcing. Of course, losing this partnership, though, is a big blow to HIMS, with Morgan Stanley even estimating that GLP-1 drugs are worth around half of HIMS' entire weight loss business. And so this new partnership with Novo, which they actually just formed the collaboration back in April, it was part of a bundled service that they had, $600 monthly subscription. It included Wegovy, but also 24/7 care and nutritional support too. So it was kind of an all-in-one package, really helped both companies out. That's why they collaborated on it. But this was really meant to be a major growth driver for HIMS, and that really has fallen through now. For what it's worth, though, HIMS has denied all of the claims by Novo, citing that under current FDA rules, they're actually allowed to sell other compounded versions if the branded drug is in short supply, which the FDA currently says that Wegovy is considered under supply constraints. Now, towards the end of the week, HIMS stock actually jumped up a little bit. It recovered a bit, jumped up by around 12% in a day after the CEO came out and said that they will still be selling cheaper compounded versions of GLP-1 drugs. Regardless, though, the loss of such a large and reputable partner like Novo was enough to convince investors to sell out of the stock, leaving it still down over 25% for the week. Now, personally, I think the sell-off is overblown just for this particular issue alone, because everyone really wants to make GLP-1 drugs right now. It's the kind of the hot new thing in the weight loss market. So I think HIMS will really have no problem securing new partnerships. However, I already own the stock myself, and I bought it when it was incredibly low in the single digits. And since then, it has climbed by hundreds of percents, with my position also up over 500% too. So I'm not planning on buying any more of the stock myself. I'm really just kind of holding them long term, though, as a health disruptor, which I think that they are doing a great job, but it's not a stock that I want to be buying more of. Let me know down below, though, if you are buying this sell-off. Moving on, though, to another stock that I own in Tesla. Well, they actually launched their new RoboTaxi service in Austin this week, putting a small fleet of fully self-driving Model Ys out on the road to transport paying customers through a limited area and charging a flat fee of $4.20, in typical Musk comedic fashion. And it was all done through a special app. Now, it was also done, though, with no human in the driver's seat. However, Tesla did still have a safety monitor sitting in the passenger seat just in case anything went wrong, which luckily there wasn't anything too crazy happening. No major crashes. Haven't seen anything like that myself. However, CNBC is reporting that some videos are surfacing out there showing that the RoboTaxis actually made a few driving mistakes, like going the wrong way, braking suddenly, and responding to stationary police vehicles outside of its driving path. Now, on the other hand, many seem to be pleased with the overall experience, with analyst Dan Ives saying that it actually exceeded his expectations too. Now, regardless, as an investor myself, I do feel that this is an overall net positive for Tesla, making a pretty big milestone here for what the CEO has long argued, that autonomous taxis will eventually drive the company's future growth, and thus maybe it can at least help justify a little bit that very rich stock valuation that currently sits at almost 400% higher than the sector median, even on the most forgiving valuation metric of a forward-looking PEG ratio. So that's pretty bad. As for that price, though, it did initially climb on the event, but it later came back down a little to actually finish the week in the red, which was pretty surprising, although it is still up over 2,000% since 2019, and much more than that if you go a little further back too. So overall, it's been a strong performer. Let me know if you own Tesla stock down below. Speaking of tech stocks, though, NVIDIA, very popular one here, had a great week once again, breaking a new record high as the company continues to ride the wave of hype in artificial intelligence, with its chips, of course, really being the brains behind most advanced AI systems out there, which both customers and investors seem to not be getting enough of. This week in particular, we also had Micron report strong earnings, which is a maker of memory chips that actually go inside NVIDIA GPUs. Well, it just so happens that Micron destroyed earnings, beating analyst expectations on both the top and bottom line, while also posting 37% revenue growth year over year, and even guiding for 38% growth next quarter too, which I believe was also above analyst expectations too. Now, in the report, the company noted surging AI data center spending in the market, which helped them more than double their sales in that segment. This is, of course, a great sign for NVIDIA, because NVIDIA really dominates the AI data center market, and as such, both stocks climbed during the week, with Micron rising about 3% and back up to just about an all-time high for them too, while NVIDIA rose almost 7% and is now up over 30,000% over the past decade, and is once again the world's largest company by market cap at an astounding $3.8 trillion, even ahead of other giants like Microsoft, Apple, Amazon, Google, and more. What do you guys think? Is this a bubble here for NVIDIA, or is there more room to run? Let me know down below. I, of course, am a big holder of NVIDIA stock. I don't plan on selling. I would really like to keep this for as long as possible, but I admit the higher it goes, I am always tempted to cash in some profits. Okay, while NVIDIA and other tech stocks were surging this week, though, big oil actually took a little bit of a hit, as more peace talks with Iran will likely mean more oil from them being pumped into the global economy, which Trump himself noted during the week that he would actually consider easing some restrictions that they have on them for selling oil, as the country will likely need the money to help themselves rebuild. Of course, more oil, though, means cheaper prices, and as a result, oil stocks fell a little bit, with both Exxon and Chevron, for example, falling about 3% each. And although both are also near an all-time high, they've actually been suppressed a bit over the past decade, only up less than 50% each. Are they looking attractive to you here? Let me know down below. As for me, I like Chevron. I don't personally own it, but I do think that they're doing a pretty good job investing and diversifying into renewables while still holding on to their big profit makers in oil. And the dividend that they pay is also very attractive at close to a 5% yield, with nearly 4 decades of consecutive growth. But as you guys know, really the only pure play kind of energy stocks that I own at the moment are NextEra Energy and Oklo. Although I may be buying Duke Energy too, but you'll have to wait for this weekend's video to find out why. A little bit of a spoiler there. By the way, although oil stocks fell this week, the drop in price actually helps other companies. Well, it also helps drivers like you and me, right? Or at least anyone that has traditional ICE cars, but it also helps big companies out there that pay for large amounts of oil or gas, notably airliners, most of which rose this week as a result of that. And although I don't own any myself, my favorite out there would probably be United, who climbed almost 4% on the news. I haven't bought any of the stock because I felt like I kind of missed the boat there on that post-pandemic recovery, but more recently it has at least been dipping a bit, and I just feel as an overall package, this is probably the more attractive one of the bunch, with also a dirt cheap valuation that is over 60% lower than the sector on a PE ratio basis. Let me know if you guys own any airline stocks out there too. Anyway, I think we'll go ahead and stop it there. There's probably more things we could be talking about, but the video will get a little long. So I think we'll try to wrap it up here. Let me know what you think about any of the topics that we discussed today. I hope you enjoyed this week's update though. And please share your thoughts again down below. I do also have a couple of really fun videos coming out this weekend, so make sure you don't miss them. They're going to be fun. Make sure you check them out. But for now, I hope you're all doing well, my friends, and I will catch you in the next video. All right, take care, everybody. Bye-bye.